Hi, everyone. Wicked overnight action every night. It's like you have to be on crystal meth to trade and be able to stay up 24 hours. You go to sleep, things look one way. You wake up in the morning and everything changes. Changes. David Bowie. So I have a couple of thoughts here. It's not immediate action. Hi, Sinatra. Fine. Stephen, welcome to Face. Well, looking at gold here with the market down sharply, as long as we hold 1640, if we don't, it's going to be a pretty good break back down to, 1600, 1580. If we do hold it, I see the potential for one more high for a third drive. This is a 4-hour chart and shows up pretty good on the daily too. As some people are saying this is one and this is two and this is three, and it's possible, but I don't like this type of spread between the formation. It's too much action. I like tighter groupings of these threes. So, otherwise you could always, find a three, right? But now it's looking to me like one, two, and we could get a three up here. And we're, you know, most likely on the daily not be able to get above 70, just like we weren't last time. So alert for that in the gold. Should that happen, silver should be able to rally back towards this level here, 1770 to 18 bucks. If that happens, and that means a dollar rally that I talked about yesterday, um, is just going to terminate or at least back test it. Yesterday, I showed that we left an island bottom, this island bottom, and we had some good acceleration. I'm trying to just stay patient for bigger things. And, there's all kinds of fib levels here. But I have a lot of confluence in the Dixie. I don't know if we could rally this far, but I sure would be a seller up here. I would try it at 61.8 with the confluence of the moving averages right here. Everyone see that? And then I want to wrap it with the S&Ps, just like we have the potential for a three drive to a top in gold. That might be what's setting up here in the S&Ps as well. Third drive on the line would be about 2630, another 160 below it. And when Steve brought up 2600 yesterday, kind of rang a bell for me for this reason. A couple of important moving averages coming in there. Where is it? Oh, yeah, auto scale. Okay, so look at this. This is your weekly, okay? 2630, the daily. Okay, so some confluence there with this moving average coming in around the third drive line. Almost looks like an uptrend. And then look at this. I like it when they show up, whether it's a 50 or the 200. Look where the monthly moving average comes in. 2600 almost looks like an uptrend line, doesn't it? And it's coming in right there, 2601. So, some of the targets that Steve showed on his charts, I have confluence of moving averages on the monthly and on the weekly. Okay, so this could be very important. If we take this out, I think 2000's there, but I wanted to show you there's a lot of confluence at right around 2600. You have a three drive and a couple of moving averages. Might be the time where, say, we bottom at 2600 and we peaked at 34, that's 800. Then maybe we get a 50% retrace back to 3000 or something. Just thinking ahead a little bit. So those are my views. We have an excellent interview, first time with Willie Delwich. He's with a very high-end firm, R.W. Baird. If you've ever heard of them, it's going to be Willie's first interview with us, and a great time to talk to someone who's a little bit more Main Street than Forex Analytics and all the derelicts that we trade with. So, put on your tie for the interview. And Blake, how you doing? How's your food supply stocking
Derelict,
up? Huh?
derelict.
All of
De
commodity
Oh,
traders that wear
oh,
those
I must be one
crazy
of
hats.
those people. Those
Yeah,
people.
yeah, you know,
So,
checkered shirts on the floor and go into the bathroom and eat a bunch of Tums and aspirins and who knows what.
is
Derelict.
that
And
is that it? Is that all
yeah,
you had?
yeah. Well, Blake. It's a family show.
What goes on the floor stays on the floor.
Yeah.
It's one of the notifications that I got this morning from JP Morgan is volumes are a lot lighter than they've been the last couple of days as we're consolidating. We're currently oh shoot, they changed everything around. Okay, hold on.
The
There we
markets
go.
are a
Can
little
you guys see my
exhausted.
screen? My S&P?
Yeah, got
Okay.
it.
Yeah. So things are a lot quieter today as the markets are consolidating these recent moves, and um, as I tweeted tweeted actually earlier. Well, let me revisit this. So as I tweeted a little earlier, we're consolidating in this triangle. Now, the assumption is that we're going to move lower because this is the trend is down.
Right.
Um, and so that's going to be the running assumption is we're moving lower. I'm hoping we don't. I'm hoping we actually rally out of this triangle higher and form some sort of as I was just drawing for you guys because I already drew it for the guys and gals in the chat room, but I'll just kind of uh, let you guys know what I hope happens. What I hope happens is we actually rally out of this triangle higher, get everybody nice and long. So like a move up
Yeah.
towards 2,900 and some change, and then reversal. That's what I'm hoping happens today, because um, I always like to catch the market wrong-footed if I can. That's like that's the best way to trade, in my opinion. Is you know when everybody starts thinking, oh, the tide has turned and you're going one direction, but like I know for us the trend, and obviously I'm focusing on the S&P because I will tailor my FX trades around what happens in equities. But what I'm hoping happens is we come out of this triangle, we start to rally, and everybody thinks, oh my God, the bottom's in. And then when um when the market actually rallies and gets everybody into all the long side trades, then you look for a failure, and then I like to trade that failure like somewhere up here. Like this is the area where I would be looking to be a seller. So um like I said, that's what I hope happens today. There's a lot of there's a lot of things that can argue why we could rally. We're going to get some sort of stimulus package from the Trump administration, hopefully, today or tomorrow. Australia is implementing some, aggressive measures. They announced that overnight. I forget what the dollar amount was. It's like 3 billion Aussie dollars or something. I don't know right off the top of my head. I can't remember. You have an emergency rate cut from the Bank of England this morning. So sorry. What I'm hoping happens is we get, a little bit of a rally, a counter trend rally that gives us an opportunity to sell into. That's what I'm hoping. Now, I'm not banking on that right now because I'm waiting for us to move. I'm not going to make a move here, not knowing what's happening. Because I mean, let's face it. The news stream over the last other than like economically what countries are doing, and you got Merkel talking about we'll do whatever it takes, yada yada yada. um you have aside from the economic news stream, you have the news about, the increasing cases and, a lot of state of emergencies. That news stream is not so positive. So um you got two opposing forces here, and I'm in the camp of, you know what are you going to do economically that's going to really, while the euro's catching a bid here. um I'm kind of looking around to see if there's any news coming out. I don't see anything. But what's the you know what's actually going to fuel uh an actual recovery? It's not going to be the economic because of the economic implications of all these central banks or fiscal spending from different governments. That'll help cushion the blow, but it's really going to be the virus subsiding a little bit. And right now, it looks like we are probably the next. I say we, I mean in the United States, we're probably the next epicenter of this coronavirus. So, it's a big push pull down at these levels, and I think we have to be really careful. Um, as we're navigating around here. I'm not convinced either way. I wish I had more conviction right now, but I don't. And the one thing that I have conviction about is volatility is still quite high. And even though it may be a little uh, light right now, volumes might be down a little bit as we consolidate. That doesn't mean volatility just automatically disappears. I think we're going to get volatility probably today as we pull out of this triangle, whether it's an upside surprise or it's a resumption of the downtrend. The propensity for a triangle to have a continuation pattern, that's the higher risk right now. The higher risk is that we break down, but I'm hoping we get the opposite, because like I told you guys before, this is how I want to play the S&P. I want to, well, not necessarily the S&P, although I might actually short some S&Ps up there, but it's actually how I want to play the market today. I want to see a rally first and then sell into that, today or tomorrow. But like I said, right now it's wishful thinking. Right now we're dealing with this consolidation, which I think we have to just be really respectful of. And I'm looking at a couple of different things, just kind of following a few different things. First of all, is the U.S. dollar Mexican peso. If we rally, and that's the big if, right? If equity markets rally here, um, I think the U.S. dollar Mexican peso. This is a currency pair I actually want to trade to the short side. Now, you guys have known, and I don't have to be, I don't have to explain this to you. I don't think in too great a detail. You guys have known for the last few weeks, I've been extremely bullish the dollar Mexican peso. I played it long as we came out of this descending wedge, and I've been playing it long for the last couple of weeks. I did not catch this last tail end of this move because we moved a lot more aggressively than I thought. But Banxico, the Bank of Mexico, has announced that they are stepping in and intervening. So what that means is basically they're trying to stop the depreciation of the peso, which I know I explained this yesterday. For central as a central bank, um, you know, you don't, well, as a trader, you don't really want to fight a central bank. So if Banxico is out there trying to basically stop the peso from depreciating in value, well, the trade that you want to be is long pesos. Now, there's a certain time to be long pesos. You're long pesos during a risk on environment. So does that mean that the peso will go up? No, because if we can continue to see downside pressure in equities, the U.S. dollar Mexican peso may just continue to grind slowly higher. But if stocks actually bounce, then the dollar Mexican peso should sell off again. Now, downside at this point in time is limited to 20, right here to 20, 30, 20, and 25, something like that. So there's not a lot of downside here, but that's what I'm watching, not necessarily trading at this moment. I'm watching just in case equities do rally. I want to see, confirmation that that the peso is actually strengthening. And if you're like, well, I don't want to even mess with the peso. I want to, I'd rather deal with other emerging market currencies. Great. So, look at the lira, or maybe the South African rand. You can focus on those too. But the emerging market currencies, I think, will give you a lot of clues as into as into what's happening in the equity market. So that's number one. Another thing that I'm watching is I'm watching the euro. I really wanted to buy the euro. I have buy orders, just so you guys know. It's still actually active. I have buy orders at the 112.50 level. Okay. The reason why I was looking for a buy down there is obviously I blogged about it yesterday. So if you missed the week ahead video, then, or not week ahead video, the chart of the day blog yesterday, then I'll just quickly tell you that I was expecting a move down to the 618. It's 618, this move. You see that? Okay. I think it's actually also a 38% retracement or close to of the bigger move too. Um, but it's a 618 of this move. It's at the breakout point. I was hoping that we would dip, because last night we closed at 112 90, somewhere right here. We closed right here. So I was really hoping we'd get that dip down to 112.50, so I could look for longs and get long with a relatively tight stop. Unfortunately, that didn't happen. So the euro is up this morning. And why is it up this morning? Well, we have some risk off activity. So while the stock market is staying heavy, you would expect that the euro continues to stay pretty well bid. So if the stock market does rally, then the euro might have that chance of coming back down here. And I'm trying to be patient with it. I'm not stepping in front of the euro saying, damn it, I'm going to miss the boat, I'm going to get long here. I'm not trading like that. I'm just trying to be very careful in where I'm buying things. Wow, look at the S&P's coming down. Watch the S&P here. We're going to come down towards the support. I think this is going to be really, really key support. I want to see how we react right here at, and that's only 15 points away, not very far. So just keep that in mind. All right, the cable. So here's the pound. They released their budget this morning, but more importantly, they did an emergency rate cut. And so you saw the cable actually dip first, but as we have seen with emergency rate cuts, the currencies tend to strengthen because you're like, wow, okay, I've got the central bank behind that particular currency. And so you can see the opposite of what conventional wisdom would say. Oh, rate cut, pound sells off, whoever was up and around, I was asleep, or I would have been buying the cable overnight, especially on this false breakdown. I would have bought it right here. This is exactly how I would have traded it. Sell off. Soon as we got back above like this 28.70, I would have been long. So unfortunately, I wasn't around, so I didn't see it. But you'll notice that the cable actually respected the 78% retracement, and it did a false breakdown and then moved back up. So what do you do with it here? I don't know. I don't. It's the cable, as far as I'm concerned now. It wasn't last week when I was buying it here. Coming out of this this wedge, it was very bullish, but now it's very convoluted. I don't know really what to do with the cable. So if I don't know what to do with it, then my natural inclination at this point in time is not to do anything. So as you can see, the cable's just, I mean, you guys can try to trade it, but I would be a buyer on dips. I don't think I'd be selling now that we've done this false breakdown. But does that mean that you buy it at current levels? I just kind of don't think so right now. I don't think that's the case. One of the things that was really moving the dollar yen yesterday. Oh, the dollar yen just spiked. Holy cow! What the hell? What? Something just happened. Something about monetary policy next week. Oh, it's a Reuters headline. Hold on. Hold on. Okay, so the headline is BOJ likely to ease monetary policy next week to prevent market volatility from souring business sentiment. So they're looking to ease. Now remember, weakens their currency first. We just saw it. This is the headline, guys. BOJ likely to ease monetary policy next week to prevent market volatility from souring business sentiment. So you see the spike up, people go ease, and then it starts to strengthen again. Same reaction we saw from the from the cable overnight. Now I'm a little bit nervous about trying to short the dollar yen at this moment. Because I'm not sure if it's going to help improve risk appetite or not. So I'm just kind of,
Last time we had central banks in a coordinating manner throwing everything at it, it was 2008. And in the short to medium term, it did no good.
Yeah, the markets did move lower. You're right, and so I'm a little. Thank you, Steven. Stop talking. I got it for another 15 minutes.
I know, bro. I know.
Yeah, Steve's throat isn't feeling great, so I'm gonna speak a little bit longer than normal today. So as you can see, look, the dollar yen spike up and then right back down again. So I'm not doing anything, just so you guys know. I'm not doing anything here. I want to short it, but I want to see if it improves the equity markets right now. And right at this moment in time, it's not. So let me just taking a quick look around. Okay. Can you guys hear me okay?
Yes, we can.
Yeah.
Okay.
Loud and
I
clear.
can hear you. You're a little bit country and I'm a little bit rock and roll. Donnie and Marie.
Donnie and Marie, yeah.
Yeah, all right.
Donnie and Marie
Osmond on different sides of the world had the same television schedule.
Yeah.
Stelios is actually half American.
I know. He
So
won't admit it though.
I know. No, just but that's funny. Okay, so a little bit of action. Like I said, I'm not sure what to make of it. I'm not sure how to trade it. That's why I'm like not going to do anything at this moment. I'm just kind of going to just let her sit. Okay. Okay. So what was I saying earlier? Oh, so this is one thing that I was watching yesterday really carefully is the bond market. So if you look at the 10-year, now I'm gonna go to the yields here in a moment, but here's the 10-year. We had this. If you guys don't know what this is dark cloud cover, big chart formation, reversal pattern. Now, as you can see right now, yields are coming down right after that just happened with the BOJ. But I'm not convinced at this point that that bonds are you want to get long again. I know it's just looking at this. Let me go back to the 10-year. Going back to this chart, if you remember last week, I told you we were over here. I said we're probably going to go here to the 127% extension and move lower. That was my view last week. Okay. Oh crap! I'm going to sneeze. Hold on. Sorry about that. It's allergy season here. Everything is growing, and my allergies are bad at this time of the year. Hold on 1 second. I got to sneeze again. Okay, maybe not. All right, I thought I was going to have to, but okay, sorry. So we basically did what I thought we were going to do. We overshot because if you go back to last week's, you probably a week ago today, you could go back and listen to what I said, and I bet you my chart looks something like this, right? Last week, so we overshot, which is typical of a market that's exploding, and now we're coming off. Now I'm not sure if this is like the top in the bond market, because you have to look at the breakout point on a weekly basis. As long as we're above this 135, basically 136, as long as we're above 136 in the 10-year, we're in breakout territory. So there's no reason to believe at this moment that it is um that. And Joe just reminded me, 1 week today was the Biden bounce, so that could have been actually the reason why the bond market was, one of the reasons why I was ripping. But anyway, this could be, as long as we're above this level, we're in breakout territory. So all I can really expect with the reversal candle that we saw yesterday is maybe a continued dip a little bit, but that means that yields would have to go up. And if yields go up, that is the force that was, and you can see yesterday, is yields were going up yesterday. You can see them right here. That was the force that was driving the 400 pip rally of the dollar yen off of the lows yesterday, off of these levels. All right, the 10, wherever we're at, 102 and change. So I'm going to be watching bonds pretty carefully today, because I think the bond market, if yields rally from here, let's just, for argument's sake, let's say yields rally, then that typically will coincide with equities going higher. So, we might get that, move higher in equities that I'm hoping for. Again, I don't know for sure. And it's something that, I'm just watching for clues, because what I'm trying to do is I'm trying to figure out clues what the S&P is going to do versus what I, assume is going to happen. I like to have confirmation from different asset classes, whether it's, the bond market, or whether it's the yen, or maybe even gold. And speaking of which, I can take a real quick look at gold. Gold just continues to be so strong. I'm not bearish on gold, as most of you guys know. What I am hoping for is we see a little bit of pullback in gold. And if we do a pullback in gold, something that looks like this would also coincide with equities bouncing a little bit, dollar yen bouncing, yields would bounce too. So again, those are just just some things that I'm trying to pay pretty close attention to. So let me do this. Let me address a couple of comments. Gavin said bounce in the S&P and DAX on all that news got sold into. Yeah, I mean, that's the thing about these markets is any good news has basically just led us to better levels to sell the S&P or the DAX, which this is very characteristic of a bear market. When you get good news and the market can't rally on it, we're in a bear market. I mean, you may say, well, Blake, we're not down 20%. I understand that, but price action is going to tell you it's a bear market. Ziggy said, Steve, if you think you are contagious, please step 6 feet away from the mic when you speak. Ziggy's a funny guy.
Blake, we have data coming out now.
Oh, data schmata. Who cares about data? Literally, who's watching data? I don't care. It's CPI. Okay. It's a
little bit hotter than expected.
Yeah, I mean, no one cares.
Stagflation, woohoo! No.
Yeah.
Yeah, I mean, who cares? It ain't gonna move the market. They ain't moving crap.
2.4% reported inflation.
No
Why
one
wouldn't you
cares.
want to? Why wouldn't you?
I was telling everybody on the daily roundup webinar, because somebody had asked about, like, what do you think the market's going to do during CPI tomorrow? And my response yesterday afternoon during the daily roundup was, no one cares. Unless it's employment data or it's an interest rate decision. All this economic data that you see right now or that's coming is all, irrelevant. We care about coronavirus, number of cases, tests that are being made, containment in countries, and jobs reports and interest rates. That's it. Anything else is all ancillary stuff. No one cares. Okay. Ziggy said, bless you, Blake. Make sure you sneeze in your elbow. It is literally, well, for now, let's just knock on wood. Let's just hope it's just allergies. All right. Let's see. Let's see.
See how we practice social distancing here at our
Yeah,
company.
exactly.
You're in Arizona, they're in Greece.
That's right.
We
hey,
were ahead
look,
of the
10
times.
10 meters away, people. Fist
we were
bumps
prepping
only.
for this 4 years ago.
We're gonna do air fist bumps. Actually, my kids' soccer team. He plays on a club soccer team. They can't high five anymore. Yeah, I mean, kids are contagious, and
it's interesting. I was just sorry to interrupt. I saw somewhere they said there was a rugby match and they didn't shake hands, and then during the match they're like all over each other, right? So
right.
That was just a bit weird.
That is funny, actually. That's a bit ironic, right? Anyway, well, so how are you guys doing today? I know, Steve, you're not feeling too terribly great.
It's okay. It's gonna pass.
Yeah, as it always does.
Yep.
And Stelios, how are you today?
I'm very good. We're all locked up in our house, and nobody's coming in, nobody's going out. So great.
You think so?
So are
Look
you
at
guys
me.
on lockdown right now?
Ring on your doorbell in a few minutes.
Is that a mandate
No,
in Greece now?
no,
No?
but the schools are closed. So as
Yep.
long as the kids are not out bringing everything from the other
Yeah.
kids, then we just stop everything. So
Yeah.
how's the attitude there, and what's the attitude around the Athens area? Because I know you guys have had, I mean, the difference between like where a lot of us Americans live, which are out in the suburbs or you're not in city centers, versus Athens, where you have a big concentration of people. How's the attitude in Athens? What's the temperature there with as far as people and what they're discussing?
Decently
personally,
calm
from
so far.
what I hear, yeah, people don't really care, which is very worrying.
Are they out and about, going grocery shopping, etc.?
Yeah, it's pretty
Not
busy
as
outside,
much
yeah.
as regularly, but it's not that
Yeah.
there are places are empty, etc. So it's, I mean, if you know that, if you know, you're going to notice the difference, but
Yeah.
nothing to write home about.
Yeah. Okay.
Interesting.
you.
Okay. Yeah. There's, aside from toilet paper disappearing, I mean, that's the thing about toilet paper.
Which, by the way, hasn't happened in Greece at all.
That's, well, I mean,
At
you think about it, it's like, oh, that's one thing I don't want to run out of. Right? Because it'll sit on the shelf forever. You don't have to worry about it, going bad. And I definitely don't want to run out of toilet paper, because if I run out of toilet paper, then we got some serious problems. What am I going to do? I'm not wiping my butt with my leaf. A leaf out from the front yard. So, yeah, I mean, that's you understand why
It would work though.
It's got a great shelf life, and you don't want to run out of it. So
I wouldn't want to be your gardener if.
No.
At the very beginning, a few weeks ago, we actually had a temporary crisis with things like spaghetti. Anything that is edible and you can store for a long time.
Yeah.
For a few days, those went out of stock.
Yeah.
But other than that, I wouldn't say that I've noticed anything else missing, and they've restocked.
Yeah.
Okay. Well, that's good. That's good to know. I mean, it's here it's pretty much business as usual, but I'm not in a city center. So, you know, you go into New York, and I'm sure Chicago probably feels something very
My
similar.
sister's in Palm Desert Lake, and she went to Costco. There's no toilet paper, paper towels,
Yeah, you know,
sanitizers, that
yeah,
kind of stuff.
those like places to Palm Desert is very similar to where I'm at. You know, it's just
Yeah.
a, you know, it's, I mean, you know,
Desert.
it's a desert. Well, it's a desert, but no one's really too terribly worried yet. And it's not. Unfortunately, it won't be a big concern here in the United States until you start to see more cases and more deaths, and then people will start to panic. We could be in a very similar situation that Italy was in 10 days ago, 10 days from now. 10 days ago, Italy was like, you know, and then all of a sudden the cases are increasing, people are dying. And then, you know, now, you know, Italy's on lockdown. So that's one thing that you have to think about if where you're at, think about how escalations have increased in places like Italy. That can happen to you. If you don't think it can happen to you, go talk to the people in New Rochelle, New York, where
They're locked down now.
well, they're locked down. There's now a, you know, a presence of
Community
a
spread.
National Guard.
Oh yeah, that's right. National Guard.
Yeah, and like one of the guys in my office, he's like, yeah, I was almost out of gas, and I was driving from Manhattan to Greenwich. He's like, and I was passing by New Rochelle, and I was like, oh, I can get off here and get gas. And he's like, no, I'd rather run out of gas. I'm gonna just continue to go. So anyway,
Yeah.
Well, guys, you know, like I said, it's quiet. I'm really just looking at the S&Ps. We're getting really close to that support, guys. So just be careful of where we're at. You know, be mindful of where the markets are at. And
The candle expansion, Blake, I don't know, like for me, since we've had this break, when I look at the candles now, where I normally could take a position, figure, oh, that candle's starting to fail, I could just get short here. But then when you look at the, you know, where the high came in, normally you'd be risking 30, 40 pips. And now, because of the expansion of volatility of ranges, that same candle that you would have traded, say, 2 weeks ago, now you have like a 90 pip spread between where you would short it and where the high is.
yeah,
You know what I mean?
yeah,
It
yeah,
bugs
no,
me.
I hear what you're saying, well, now we're seeing contraction, but we can see expansion here very shortly.
And you go to you go to sleep at night, and you wake up, and it's a completely different picture.
Yeah, you know,
That's hard to deal with for me.
I was talking to my neighbor. He's you know, we were talking about like some of his retirement stuff, because he was leaving, and I'm watching their cat, and he's like, yeah, you know, we were up really big today. I bet we're going to be down really big tomorrow. And he's like, I just kind of, you know, figured that that's going to be the case. And yeah, I mean, you know, up 4% yesterday, down 3% today, you know, business as usual. So I'm going to pass it over to Steve and Stelios and for the last 20 minutes. And Steve, if your throat's starting to hurt, let me know. I won't go anywhere, but I'll let you take over
sure thing,
and
mate.
talk a little bit. All right, guys, hey, have a great one. And for those of you that haven't tried out Forex Analytics, make sure you do so. We'd love to have you part of our community. So we'll see you there.
And those of you that don't benefit from your trading, just, you know, visit Forest Park FX. You can participate in our reimbursement program, you know, and subsidize your subscription to Forex Analytics, or you can just get cash back. In any case, you know, don't leave money on the table. Just, you know, speak with them. They can help you either find the ideal broker for your trading style, or even, you know, if you've made a good choice, stay with your broker and get money back. I mean, there is absolutely no downside whatsoever.
It's a no-brainer.
Yeah,
you know, Steve, I don't know about you, but sometimes it's good to have 2 accounts, different brokers.
Oh, I agree with you.
You know, I mean, how do you know if you have a good racehorse until you run it against another?
Yeah.
That's not the only reason, Dale. I can give you plenty of reasons. First of all, sometimes it helps using different trading styles and methods
people
on
do
different
that.
accounts.
They have
So
a day
that's one
trading
thing.
account and a position
Exactly.
account. Yeah.
Exactly. So, for example, you want to use high leverage in some positions. It's a good thing if you want to, isolate that on a separate account. Or, for example, you might be a diverse trader trading plenty of instruments, in which case you might need a second brokerage firm because there are a few instruments that you want to trade that your main one doesn't offer, but you don't want to go off your main one because it still gives you the best deal of for your trading style. Another reason is you might want to do something foolish and you want that to be completely isolated. I can give you an example about that. When the S&P had the floor, I used to trade Euro Swiss with very, very high leverage. And of course, I did that on a separate trading account. So, various reasons that you might want to, actually, I advise for you to have, a second account. And if you are to have a second account, why have it, with the same brokerage firm? Because something happens, to that brokerage firm. There is some downtime or some disruption or whatever. At least you will be able to trade in the other one.
Yeah, absolutely.
Another good reason. Yeah, not to have all your trading capital in one basket.
Yeah.
Yes, exactly.
Okay, so my quick comment on the Bank of England. As soon as I saw that they cut 50 basis points, I was like, why are they doing this? It's like, it doesn't make any sense to combat this particular crisis, the rate cuts. Obviously, it does have some effect, but it's not really the thing to do. And I wrote this on Twitter. Somebody replied, oh, in the UK, there's a huge mortgage base, and this will help people with their mortgages. Yes, of course. Although I did have a mortgage for quite a few years in the UK, and you know how it happens. They cut 50 basis points. The whole thing doesn't get reflected. I remember
Of course it doesn't.
They cut from 5.75% in 2008 down to nearly zero, and my mortgage rate didn't even go down a half by 50%. So it was like, it doesn't get carried over. Plus, what is the issue that we have now with the economy? Is it that money is expensive, that people cannot borrow? No, it's people staying in, not spending anything because they're scared, crapless of what might happen. They don't do anything. So cheaper funding, cheaper money, will that change anything? Absolutely not. Obviously, it's good for psychology and it's good to have something for their recovery. But actually now, will 50 basis points less do anything? No, they won't.
It's good for the psychology. I'm not even sure about that, Stelio.
Yeah.
As I said, the previous time we had all central banks in a coordinated manner, just throwing everything at the market. It was in 2008, and the market couldn't care less.
Yeah.
Of course, somebody will say that at some point, they're gonna do enough. There's gonna be a big bazooka, and the market is gonna respond. But my interpretation is that at some point, prices are going to be again low enough for the market to care to respond.
Yeah.
Until prices go back to more normal levels, when the market is back to not pricing rainbows and unicorns, then people are going to start considering the upside for taking risk. Because why would you be taking risk when there are days in this market that respectable stocks can dump by 25 and 30% on a day?
Yeah,
like, for
absolutely.
example, we saw oil stocks do, and I'm not talking about the ones that have crappy balance sheets, because we saw some of them dump within a day more than 50%. I'm talking about the big companies.
Yeah, Exxon and Shell, Royal Dutch, and all those. Yeah, they're nearly all-time lows. So
yeah, because we had some of the crappy ones, those that are loaded with debt, etc.
Yeah,
that
of course.
Combined Friday and Monday lost something like 60 to 70% of their capitalization, which is like insane.
Yeah. Yes. Okay, actually, speaking about the UK before, and just to close that up, they did actually announce 2 more measures, which are more in the right way. But then again, they're not going to solve anything right now, but they announced a new term funding scheme for small and medium enterprises. So that's going to help them borrow. Although again, the issue with the current problem is not that people cannot borrow at low enough rates. That's not the issue. But this will help the economy, obviously, in the medium term. And they also released what is called the UK's counter-cyclical capital buffer, which is something that it's for banks' exposure to UK borrowers. So basically, net, it just releases more money for the banks to lend.
Net, they're going to start guaranteeing once again for the debt and the liabilities of several companies, and the only one that's going to be on the hook is going to be the taxpayer, as always.
Yes.
Yeah, and they keep repeating the same mistakes that exacerbate the severity of the business cycle over and over again. I mean, it's amazing. If you saw this type of practice being applied on any other sector on the globe, you would consider them like crazy. But they keep repeating the same mistakes, and they do it even more, although they haven't worked the first time or the second time or the third time, and the only thing they manage to do is postpone the inevitable. They keep doing them again and again and again. I mean, if, for example, quantitative easing worked, if zero rates as emergency measures worked, you know how we would know about it? Because we would have had only one round of quantitative easing, only once seeing every, let's say, 50 years, seeing countries go to 0% rates. Now, on the contrary, we're stuck with 0% rates with, short-term bounces off them, and we're just increasing further and further quantitative easing. Of course, none of the monetary policy gimmicks are going to solve the actual real problems of the economies, and that's the biggest problem of all.
Yes.
Anyhow,
absolutely.
back to the charts. Unless we have anything else.
No, just one last thing that I read just now. We have the UK Chancellor Sunak announcing the budget, and he did say the response to the virus will be temporary, targeted, timely, and coordinated with the Bank of England. And this guy on Twitter, who I quite like to follow, says, please remember this next time you're told the Bank of England is independent of government.
Yeah.
But anyway, yeah. So let's see what the UK.
They're not even holding the pretenses anymore, right? I mean, if I honestly don't know how many people out there really believe that central banks are independent, because if you do, let me give you my email. I have a bridge to sell you once the webinar is over.
Yeah. Anyway, let's see what happens tomorrow with ECB. They're expected to cut a little bit. I mean, 10 basis points or 20.
Which is going to make zero difference.
But
zero.
Obviously, let's see what other measures will be taken. But really, what we need is fiscal measures. What we need is actually organized measures from the government to make sure that everybody isolates. And, if this is done properly, have you seen Japan? Japan started way before Europe, way before Italy with the first cases. They still have, I think, something like under 20 deaths. And remember, the demographic is much older. They're much tighter in terms of areas and all that, and they're controlling it. Why? Because everybody's staying home and doing what they need to be doing. So I think that's what needs to be done: a government coordinated action to enforce this, and then everything's going to be fine eventually. So anyway. Let's see.
Indeed. Okay, so ciao Steve, on a declining crude, guess NOK will suffer too. How bad versus USD and Swiss? Yeah, obviously, crude being under pressure is a huge headwind for both the NOK and the Canadian. Okay, they're not as tightly correlated as they used to, but of course it does play a role. Now, the first question here is, how low can crude go, right? We know that we almost touched the multi-year low, which was registered at the start of 2016. It was at just above $26 if we're talking about WTI. And we rebounded somewhat. The question is, was that the low? I highly doubt it. Let me be very clear. I do believe that crude is going to be an amazing buying opportunity in the not so distant future, because there is absolutely no way that crude can be sustained at prices, below $30 for, a big period of time, especially given my bias having to do with the dollar. So especially crude, priced in dollars, no way, if you ask me. But that doesn't mean that we can't stay here for weeks, even worst case scenario, even months. And doesn't even mean that we can go down to 20 or even, high teens very temporarily. Let me make it clear, very temporarily. So as I've said before with commodities, the lower the price goes, the better the risk reward is, because opposite from what can happen to a stock, a commodities price cannot go down to zero. As simple as that. I mean, there is no indefinite downside for crude. Can crude trade to 15? No, it can't. And if it can do that for a day, yeah, okay, whatever. But that's not the point. I mean, you cannot have, the world still needs crude, and it's going to need for many, many years to come. And there is absolutely no way that there's going to be supply in the market if prices stay where they are. First of all, US shale industry is going to go completely bust if this, becomes a thing for more than a few weeks. US shale industry was anyhow, at big trouble, because US shale industry is a high cost production segment of the oil market, and that's a big problem, because they've been running underwater for quite some time during the past few years, and most of them are hugely indebted. So first of all, there is a big chance that this industry is going to go out, or alternative is we're going to see some kind of a TARP program, but for this industry. Now, does this fix the problem? No, it doesn't. Supply is going to start getting reduced, and with quite a fast pace, from all over the globe, and that eventually is going to balance with whatever decrease in demand we have, and then crude is going to have a lot of upside. So going back to USD NOK especially, first of all, USD NOK is now trading above this multi-year ascending channel. You can see it here. But would I be buying it? No, I wouldn't be buying it. I mean, I would be more than happy to short it once I get a big signal, but I wouldn't be buying it, because I'm very skeptical about the upside that's left here. If you compare the fundamentals of the Norwegian economy to the US economy, it's not even fun. It's not even fun. Norway not only has an extremely low debt, but they've managed to set aside $1 trillion in the sovereign fund from the income they make from crude, right? 1 trillion. And if 1 trillion doesn't sound much to you, just consider that the population of Norway is 5.4 million. So 5.4 million people have managed to run their economy in a healthy manner and put aside $1 trillion. So, if you want to be long the US dollar against, the Norwegian NOK, be my guest. But there is no way in a billion years I'm doing that. Because at some point, and in the not so distant future, the USD NOK is going to be one of the best FX trades you've seen in decades, in my opinion. It's going to crash in, like it's nobody's business. Because at some point in the not so distant future, fundamentals are going to start to matter. Debt is going to start to matter. Debt always matters. You can ignore it for a period of time, and in a coordinated effort, they can agree that we all ignore it. But, at the end of the day, debt creates huge headwinds to an economy. You have to spend more and more of your tax receipts to service it. It creates huge issues indirectly. For example, the huge pile of global debt is what forces central banks to keep rates at zero. Actually, it's not forcing them, but the combination of central banks not being independent and wanting to give a free pass to politicians to not do the right thing is what forces them, in combination with the debt, to keep rates at zero. So keeping rates at zero creates huge issues, for example, for pension funds. Isn't that going to affect the economy? Of course it will. So, you solve one aspect of the problem by creating, huge issues on, on other parts of the economy, with the only benefit being that those are not issues that are going to blow up in your face immediately. And, it's the usual kick the can down the road, extend and pretend, you can call it as you wish, but it's the same type of deal. But at some point, the further down the future inevitably becomes today, because when you push something forward in the future, there is a day that's the future, right? So, when all those things start mattering again, and trust me, they will matter again. They mattered for eternity and they will matter once again. Then the Norwegian kroner is going to be one of the best currencies you will want to own. So no, I'm not going to be buying this breakout, no matter where crude goes, even if it goes down to $5 per barrel, which isn't going to happen. But I'm just saying, I'm going to be looking for the reversal, and then I'm going to be buying as much as I can, and I'm going to be holding as much as I can. Now, Canadian dollar is a totally different story. As you know very well, those of you that have been here, I've been very bearish the Canadian dollar. Actually, the USD CAD is probably one of the very, very, very few FX pairs that I'm long. My bias, sorry, I don't mean I have a position. You wouldn't know if I had. My bias is being long USD against the Canadian. And because Canada doesn't have all the benefits that I just explained that Norway does. Canada also has huge problems to their economy. So bottom line, I do think that USD CAD can keep moving higher. It has broken through and 1 year and a bit consolidation formation here, and I think that this breakout is very legit. And I could easily see Canadian trading back above 140, right? In any case, by the way, any pullback towards like 136.60, if that doesn't work, 135.70, these are good buying opportunities in my opinion, especially for some reason your bias is being long the dollar. I have no idea why that would be. I mean, from my personal perspective, I mean, any any position is respected as long as you know what you're doing and you have the proper risk management. But in any case, if you're looking to be long the dollar, definitely USD CAD is where you want to be looking to do that. So, these are the areas I would be looking to buy. What about palladium? I'm still short palladium, actually. I'm still short palladium, and I'm not very enthusiastic about it, in the sense I'm deep in the money, but I really was hoping, and it's not unlikely to happen, but I was really hoping that palladium is going to really crash, like see a few more days like the one we had in the first day we reversed lower, which was like at some point we were like 13% lower. So far the pullback is orderly. I mean, orderly in comparison to anyhow the amazing rate of appreciation that we had for this pair. My thesis remains that the next downside support is at 2,250, but I really want to see palladium back to 2,000, and I think it can happen. Now, as I said, I would be more than happy to see some kind of an acceleration lower, but so far, even if this is a corrective move, I do think that we can at least make it towards 2,250. So I think there's more downside to come here. Now, would I be selling it here if I had no position? Probably not. I mean, you had a few opportunities to sell it. Risk reward probably isn't, on your side if you want to do it, today, right here, right now. Let me see more questions. The best is just taking another 50-point ship and will surely like nothing. Could you look at crude oil? Yeah, we already did that. By the way, now that we mentioned crude, look at natural gas. And this is a very interesting divergence if you're asking me. Unfortunately, I've taken profits on natural gas when we pulled back my my stop loss got triggered, which I had trailed into my profit. Look at natural gas. I mean, crude is still moving lower, and natural gas seems to be breaking above this descending channel. So this is also something I'm paying attention to, because this divergence might be indicative of like a bigger turn in this market. So I think that, I think that's something you have to pay attention to.
Because when what happened with crude, people don't want to touch energy, period. All right. So you're not going to have a big flow of public money coming into nat gas when everyone thinks, so, we're going
and
green.
Speaking of that, I think it's worth mentioning that great article that Kirk Spano wrote.
Yeah.
And he very well made the point. He said that, listen, I'm going to be looking to be a buyer of oil in the future. But, you should be very, very careful buying companies.
Yeah.
Because they're in big trouble. Yeah. So I think that's worth noting.
Well, our guest is here, buddy, and you could go rest your throat.
Yeah, absolutely. Who do we have today?
First time guest, William Delwich. I hope I have your last name pronounced correctly, Will. And, his friends call him Willie, I believe, and he's with R.W. Baird. They're an upper echelon firm, a lot of great research, great reputation. And in fact, Joe just put on Skype an article that Willie wrote on recent market actions. So I'm looking forward to
great.
talking
Enjoy.
to him. Yeah. So, okay, Willie, I'm going to promote you to a panelist. It looks like you might be calling in.
I know we didn't cover plenty of questions, guys and gals. I'll do that tomorrow.
Okay. Feel better, buddy.
Thank you, Dale.
Okay. So I think I unmuted him.
No, you haven't. I can do it if you want.
All right, go ahead.
Done.
Willie, welcome.
Hello.
Hello, Willie.
How are you?
Good. Very nice to meet you. Thank you very much for spending some time during these historic market moves to be with us today. Very nice to meet you.
Yeah.
Okay, so you're on a phone. I'm going to be sharing my screen while we're talking about things. I just read quickly the last article you published for See It Market, but before we get to the markets, it's always interesting to our audience to know how people get from point A to point B. Maybe you could tell us about how you broke into the business and how you got to where you are now, a little bit about your journey in trading and managing money.
Yeah, sure. So I've been with Baird for...
Can you give us a little more volume, Willie?
Oh, I will try to do that.
There you go.
Can you hear me now? Okay.
Yeah, better.
So I've been with Baird for 20 years. I started more in a econ background and then switched over to the market with kind of giving advice to our financial advisors to help them. I'm getting a bunch of echo in the background from your speaker. Is there any way we could fix that?
Yeah, I don't know how to correct it. It's all on your end.
Okay.
You're not echoing to me. You're hearing yourself echo.
Yeah.
Okay. Yeah. Next time you're on, I'd advise you probably just use your laptop, come in and talk to us that way. But can you move forward with it, or is it too annoying? Yeah. We could always reschedule.
I'll give it a try.
Okay.
So
go ahead.
So I've been focus mostly on kind of high level macro stuff for our financial advisors, giving them a sense of what's going on in the economy, going on in the market. Along the way, I got the kind of requisite credentials. I got to work on my CFA, got a master's in economics, got my CMT. So it's really an attempt to be able to provide perspective from multiple angles, not just the specifics of the technicals, but the kind of what the macro backdrop looks like and what some of the fundamentals are as well. So
I tell you what, Willie, the volume quality is pretty poor.
Okay.
So what I would suggest is you and I reschedule, and next time, if you could just log in instead of call in, we'll be able to communicate better.
Okay.
Is that okay?
Yeah. Yo, that's great. That's great.
Now you sound great, but that's only when you're concentrating on talking loud. If you do it like that, we could do this interview. Otherwise,
okay. Well, I need to. I think we should probably reschedule it.
Okay, buddy.
I'm hearing so much in the background.
We'll reschedule before the coronavirus peaks. How about that?
That sounds great.
All right. Thank you, Willie. I'll get back to you. All right. Bye-bye. So, unfortunate, but I think you could see Willie's article there on See It Market. Let me just take a quick look around before I say goodbye to everybody. So S&Ps are trying to hold, getting a little fade in the gold up here. I don't know. I'm flat. During these times, I know you got everyone feels like they're missing a lot of things. I do as well. Feel like you're missing everything with all these big moves. And this is the time to say to yourself, it's okay, I don't see anything. If I'm patient, I will. So, and let things come to you. And the markets will be here. Make sure your equity is. And most of all, don't just count your pips, count your blessings. We'll see everyone tomorrow. I have DJ Thistle. DJ's made some fantastic calls. So see everyone in members chat. Don't forget to give us a try and become part of our trading community so that when face ends like it is right now, you just go into the chat room and say, hey, Blake, yen's coming off. What do you think? So I'll see everyone tomorrow. Adios.